Imagine this for a moment, and don't rush it. You open your phone, you tap the Uber app, you hit book ride, and instead of a driver pulling up, a silent, fully driverless robotaxi glides to the curb. No conversation, no tipping screen, no human behind the wheel, just artificial intelligence, cameras, sensors, and software working together in real time to take you exactly where you need to go. Cheaper, more efficient, and statistically safer. Now, here's the part most people still don't understand. This isn't a future concept. This is already happening right now. As of December 2025, Uber Robotaxi services are live inside the Uber app in Dallas and Dubai, with additional cities already approved or in rollout. And Wall Street believes this single shift could completely rewrite Uber's cost structure, potentially driving 40%, 50%, or even greater upside over the next few years if execution continues. Today, we're breaking down why Uber may be standing at the edge of its most important transformation ever, and why long-term investors are watching this pullback like hawks. Welcome back to Simpson Foresight, the channel where we turn complex market narratives into clear, high-conviction insights designed to help you build real wealth over time. I'm Mr. Simpson, and today we're diving deep into Uber technologies, ticker Uber. This content is educational only, based on publicly available data. Always do your own research. Let's ground this story in numbers, because fundamentals always tell the truth eventually. As of December 19th, 2025, Uber is trading around $79.70 per share, placing its market capitalization near $167 billion. Just a few months ago, this same stock was trading above $100. So what caused the pullback? Short-term market volatility, higher interest rate uncertainty, rotation out of growth stocks, general macro fear. But here's the key insight most investors are missing. Uber's underlying business did not weaken. In fact, it strengthened. That's why several analysts are now calling Uber historically attractive at current levels. Average Wall Street price targets cluster between $110 and $112, implying roughly 38 to 40% upside from here. And the more aggressive bulls, they see even more. Arete Research recently upgraded Uber with a $125 target. Some long-term valuation models extend toward $135, $145, even $150 if autonomous scaling accelerates. So, what's fueling this confidence? Let's talk fundamentals, because this is where Uber quietly shines. Uber's core platform is not slowing down, it's accelerating. Monthly active users now exceed 171 million, growing 14% year over year. Trips per quarter have reached 3.1 billion, up 18% annually. Gross bookings continue to climb at a high teens growth rate. Uber Eats and delivery revenue are growing north of 20%. Mobility margins are expanding quarter after quarter. And most importantly, Uber is now consistently profitable. This matters more than anything. Free cash flow is strong and recurring. Adjusted EBITDA margins are approaching record levels. Balance sheet flexibility is improving. Uber has already done the hardest thing possible in tech. It proved it can generate real profits at global scale. So why do investors believe the next phase could be exponentially more powerful? Because of one word: autonomy. Autonomous vehicles represent a structural shift, not just a product upgrade. And Uber's strategy here is what separates it from almost everyone else. Instead of spending tens of billions trying to invent self-driving technology internally, Uber chose a smarter path. They became the platform. They partnered with the leaders: Waymo, Everyday, WeRide. Uber provides the demand engine, the routing algorithms, the payments infrastructure, the global user base, and while partners provide the autonomous technology. This approach dramatically reduces risk, capital burn, and execution failure. And now, this strategy is moving from theory to reality. On December 3rd, 2025, Uber launched full robotaxi service in Dallas, covering downtown, uptown, and surrounding districts. Days later, Dubai expanded driverless rides through WeRide. Atlanta and Austin are actively preparing launches. More US and international cities are already in regulatory approval pipelines. And CEO Dara Khosrowshahi recently confirmed something critical. Uber plans to operate robotaxi services in more than 10 cities by the end of 2026. That statement alone changes the investment thesis. This is no longer someday. This is execution. Long-term, Uber envisions a global autonomous fleet exceeding 100,000 vehicles, scaled through partnerships and powered by Uber's platform, with NVIDIA supporting key infrastructure layers. Asia, particularly Japan, could emerge as one of the fastest adopting regions due to aging demographics and labor shortages. Because this is where the story becomes explosive. Today, drivers represent roughly 70 to 80% of total ride costs. Autonomous vehicles remove most of that expense. No hourly wages, no benefits, no human inefficiencies. That means rides can become 30 to 50% cheaper over time, and cheaper rides change everything. Lower prices increase demand. Higher demand increases trip volume. Higher volume creates massive operating leverage. Some long-term models suggest Uber's operating margins could expand toward 22% or higher by 2030. Now, consider the market opportunity. The global robotaxi segment alone is projected to reach $40 to $45 billion annually by the end of the decade. The broader shared autonomous mobility market, as large as $1 trillion. If Uber captures even 20% market share in the US long term, the revenue impact would be enormous. That's why analyst sentiment remains overwhelmingly positive. More than 30 major institutions currently rate Uber a strong buy. RBC, Morgan Stanley, Goldman Sachs. Most cluster around 110 plus targets. Some discounted cash flow models place Uber's long-term fair value north of 160, assuming autonomous adoption scales successfully. So why is the stock still under $80? Because markets rarely price paradigm shifts correctly in real time. They wait, they hesitate, they demand proof, and by the time certainty arrives, the upside is often gone. That hesitation is where opportunity lives. Of course, there are real risks. Competition is intense. Waymo is scaling rapidly. Tesla has autonomous ambitions. Regulatory environments could slow expansion. Short-term volatility will remain. There's also the possibility that autonomy becomes vertically integrated, potentially challenging Uber's platform dominance. That's why diversification matters. That's why position sizing matters. And that's why patience matters. But when you zoom out, real robotaxi launches are happening now. Profitability is already established. Analyst conviction remains strong, and the long-term tailwind is undeniable. Uber is no longer just a ride-hailing app. It's evolving into a global autonomous mobility platform. And moments like this, when fear collides with fundamentals, are often where long-term wealth is built. If this breakdown helped sharpen your perspective, hit like, subscribe, and turn on notifications for more high-conviction market insights. Drop a comment below. Are you buying this pullback? What's your 2026 price target for Uber? Stay informed, stay patient, stay ahead. Disclaimer. This content is for educational purposes only and does not constitute financial advice. Markets involve risk. Always conduct your own due diligence.